tech stocks finishing a bruising week with anxiety over AI spending and semiconductor supplies, sending chip stocks sharply lower.
That's right. The Nasdaq Composite finished the week down minus 4.5%, while the Nasdaq 100 and S&P 500 also finished the week in the red. Joining us now, we have Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, and Bloomberg's macro strategist, Crise. Cameron, we're going to start with you. Thanks for coming on the show. I think it's your first time. Basically, what was the biggest source of the volatility we saw in the markets this week?
Well, it's interesting because I think you could argue that the largest driver of the price action was levered ETFs, which are, as the name would suggest, a leveraged way for investors, retail investors, to participate in the movements of the financial markets. And what these things do is kind of, as you'd expect, is they amplify the volatility. And that the nature of the product is such that when the market goes up, they have to buy more simply to maintain their target exposure. And when the market goes down, they have to sell more to maintain their target exposure. And when sort of the price action starts to roll over, as we saw this week, these things generate very, very substantial flows. I think on Wednesday, the estimate is that they contributed something like $45 billion of selling into the close. So this is sort of a new development insofar as the assets under management of these things has exploded as the AI trade has driven prices up. And it's sort of reminiscent of what we saw in early 2018, when volatility-based exchange-traded notes sort of blew up the market temporarily in early February.
Our colleague Isabel Lee writing about what you're just talking about there, Cameron, saying what the rout showed us here is how it exposed the machinery of modern speculation, how quickly it can work in reverse. Mandeep, let me turn to you and pick up on what Lisa mentioned just a moment ago. That is what we've seen with Anthropic and OpenAI really over the last few hours here. We saw with Anthropic it winning approval to restore some access to its powerful Mythos 5 artificial intelligence model. I think it was only just a couple of weeks ago that there was that notice really put out on social media that the company could no longer effectively do business globally when it came to those sophisticated models. How do you look at these developments, I should say, with OpenAI facing similar restrictions from the U.S. government? There's some palpable displeasure from Sam Altman about the way that this is being restricted, the way that the government is imposing this regulation on these two AI companies.
I mean, look, the government is definitely finding it hard to, enforce this. So even though, Anthropic's Fable model was restricted from being accessed to, other foreign nations and really anyone outside the U.S. citizens, it's very hard to enforce and practice. And at the end of the day, I think what the government is looking for here is really understanding the capabilities of these latest models. What is the incremental capability, and could it be a risk? And so to my mind, it will be the same with OpenAI. I don't expect that to be, a wide-ranging sort of enforcement in terms of preventing model access for a very long time.
Cameron, we've also got SpaceX is going to join the NASDAQ in July, the NASDAQ 100. Since its IPO, it's now fallen basically back to where it started. I want to ask you how that faded so quickly. Is that just kind of a natural correction?
Yeah. I mean, if you look at SpaceX's financials and you didn't know Elon Musk was associated with the company, you probably wouldn't touch it with a barge pole.
You don't think that prospectus full of pictures of rocket ships were inspiring?
I think paying 100 times revenues is not the typical path to fame and fortune in the investing or speculating game. So, yeah, we've seen this thing before with a lot of high-profile IPOs. I remember to my mind, the SpaceX circus is what I'll call it. Was sort of reminiscent of what we saw with what was then Facebook back in 2012, which much ballyhooed social media at the cutting edge of the technological frontier, as it were. And that thing turned into face plant, really, for the first year before it eventually turned around. So Listen, anyone who got the allocation and wasn't locked up had sort of an immediate windfall gain on something that they kind of knew was pretty expensive. And so there is this temptation to sort of lock in gains. So I wasn't hugely surprised by this, and particularly in the broader context of, as you say, technology stocks having kind of a rough week, and maybe people starting to reevaluate some of the breathless narratives that have underpinned the whole AI trade. We saw, for example, in Korea late in the week, SK Hynix, one of the big memory chip makers, has announced plans to sell stocks, raise around $29 billion, I think, on the New York exchange. And both SK Hynix and Samsung are talking about pretty huge capex plans. Now, one of the reasons that chip stocks have benefited so much is that they've been raking in cash, while the hyperscalers have obviously been spending a tremendous amount of money on capex. And what we've seen over the course of last year is those hyperscaler capex heavy stock prices have actually fallen in aggregate as the chip makers have soared. So if the chip makers are now at the part of the cycle where they too have to start deploying significant sums in capex to maintain capacity, then that makes the investment prospects perhaps a little less rosy than we may have thought even a week ago.
Mandeep, the beauty of the show is we can kind of look back before we look forward. We have a moment here to pause, and I want to go back to the beginning of the week, which was when Micron Technology reported its earnings, and looking back before that, even to the
I'm impressed you can remember the beginning of the week at this point, but yes,
there was so much anticipation to see those earnings, and then so much relief when those earnings came out. And I wonder what's that emblematic of, picking up on what Cameron was saying just a moment ago here about sort of the way that the chip stocks are so integral to this broader AI ecosystem, and sort of how much faith or interest investors are paying to how they're doing, how they're able to keep up with the demand that we're seeing.
Yeah, look, I think from the results, it was really about pricing. Anytime a company gives you, 74% quarter over quarter growth, and, the bulk of it is driven by pricing, I think it tells you the story about the supply demand mismatch, which is why, all these companies have to increase their capex. And look, for some of these hyperscalers who are suffering because of these high memory prices, they'll look for alternatives. Like just yesterday, there was news around Apple looking to use Chinese memory chips from CXMT. They have gone to the government for approval. So that's where I think you will start seeing some optimizations, whether it's using chips that consume less memory. And there will be, I think, changes in terms of how people are going about their memory consumption. Because clearly, Apple raising prices for their devices, or these hyperscalers having to raise the compute prices, is going to result in demand destruction. And it'll be interesting to see how, companies like Micron and SK Hynix kind of go forward with their price increases. And they talked about, using a lot of long-term contracts going forward to create a ceiling for how much price can go up. But it has already gone up substantially. And that's why I think you see the reaction in the hyperscaler stocks.
Right. We saw those Apple shares plummet after saying they were going to have to raise their prices due to those chip costs. Finally, I want to ask you, Cameron, New York Times is reporting that OpenAI is considering delaying its IPO until next year after seeing what we were just talking about with SpaceX. Are companies starting to get concerned, or maybe just seeing the reality of the funding troubles for these massive IPOs as they consider going public?
Well, I'm not sure if it's to do with SpaceX so much as it is to do with OpenAI's own financials. Obviously, I'm not privy to those, but I think there's legitimate questions about how much revenue the company is actually generating relative to its cost planning. And the other issue is whether we're, as Mandeep just said, whether we're already starting to see some sort of demand destruction as a result of price rises. Anthropic obviously changed their pricing structure this month. And my own personal experience is that the price went up. So whether companies are deriving enough benefit from AI to justify a higher cost is something that I think is a legitimate question. And more generally, we're so used to technology being a driver of disinflation. The big change, the big macro change around all this AI at the moment for the last few years is that technology is now a driver of inflation, as we saw with Apple. The reason the stock price got crushed this week is that the presumption, which is a natural one, is that the products were previously priced to maximize profitability. By raising prices substantially, obviously the company is going to be suffering from riding down the demand curve, where higher prices lead to lower aggregate demand. And that's something that the technology industry generally is going to have to try to deal with.
Yeah.
And that OpenAI is evidently musing on delaying their IPO is suggestive that for them, the numbers might not be that attractive at the moment, because no one delays an IPO because they're making too much money and have too much fun.
That's right.